The lifeline for Botswanan minerals is access to market. So in the next 15 minutes, I'll give you a quick overview of where Botswana stands when it comes to logistics, what the challenges are, and what some of the opportunities are in unlocking some of the massive potential that still lies within the minerals sector. Over the last few days, the topic of diversification in the minerals sector has been addressed several times. And a lot of this diversification is driven by market access or is prevented by the lack of market access. Particularly bulk minerals require an efficient and cost-efficient route to market, which only partially exists in Botswana today. At Anura Partnes, we launched a report called Tracks to Prosperity around some of the logistics challenges and specifically around the Mamabula-Lephalale link corridor. We launched this report at the Mining Indaba in Cape Town in February this year. We also had some speakers around this event, the Deputy Minister of Finance of South Africa, the head of the Presidential PMO in South Africa, also the CEO of Botswana Oil, as you see here. To also show that there is an interest from both sides of the border on realizing the potential in logistics. So what did we do in this report? We looked at case studies across Africa, what it means to develop successful rail corridors. We interviewed many experts. We had a data-based model that allowed us to derive implications on cost and business case. And then we applied all this on the different corridors and specifically the Mamabula-Lephalale link corridor. So the lifelines. Botswana currently is a landlocked country, but clearly follows the vision of becoming a land-linked country. If you followed media and the statements from the Ministry of Transport, but also from other ministries and the presidency in Botswana, there's been a clear dedication towards improving the logistics channels, looking to the west with the Trans-Kalahari corridor linking Botswana to the port of Walvis Bay, going north via the Kazangula Bridge to link Botswana to the resources in Zambia and DRC, going east via Zimbabwe to Maputo or to a potential new port, and then via a fairly short route to the Mamabula-Lephalale link corridor to linking into the existing South African network. So those four projects are all being covered and addressed right now. The project that is most advanced and is the easiest to implement, considering it's the smallest greenfield build, i.e. new build, is the Mamabula-Lephalale link corridor, which I'll be focusing on in the next few slides. So on the left-hand side, you see the existing rail networks in Botswana and in South Africa. So the black lines is what is existing already. You have the line from Gaborone to Francistown, and then you have a line from Lephalale just across the border in South Africa to the port of Richards Bay, potentially also linking to the port of Maputo. This Mamabula-Lephalale link corridor project includes four different elements. One is the upgrade of the Botswanan rail system to accommodate up to 24 million tons. Number two is to build a greenfield link, basically a bridge across the Limpopo River, to link the Botswanan rail system, existing rail system, into the existing South African rail network. Number three is upgrading part of the South African network to accommodate for 24 million tons per annum. And then number four is upgrading or accessing port facilities in Richards Bay or other East Coast ports. The Greenfield link is 113 kilometers, so it's a rather short rail project in the big scheme of things. If you look at Trans-Kalahari, we're talking around about 12 to 1,500 kilometers of new build. So what does this corridor accommodate? The corridor is an export and an import corridor, which is important. It's not just to evacuate minerals and beneficiated minerals from Botswana to export markets, but it's also a lifeline to import goods less expensive and more cost efficient into the country, particularly containers and oil. But on the export side, minerals are critical. The biggest potential here is coal. The likes of MCM or Minergie and also going forward Jindal really rely on this corridor to have a cost-efficient route to port that also will carry the expansion of all the bulk and particularly coal, but all bulk mineral mines in the country. Other minerals or other products is ash, Botswana ash namely, copper, nickel, manganese, other critical minerals that will have a much more cost-efficient route to port with this corridor. How much does it cost? This slide is split into what the infrastructure cost is and what the cost for rolling stock is. Rolling stock is the trains. Overall, the cost amounts to roughly 2.7 billion US dollars. That might seem like a lot, but in the grand scheme of things, if it's compared to other infrastructure and particularly also transport logistics and transport infrastructure projects, the number is actually not that big. But the best message around the costing is that this corridor would come at no cost to either of the governments, neither the Botswana nor the South African government. We've had significant interest from funders, developmental funders and commercial funders to take this project forward. So there is a viable business case. The technical pre-feasibility study has been concluded. The numbers work and the investors are waiting to put money down. I get regularly emails and calls asking Max when can we get going here. Why is this corridor so relevant for Botswana and South Africa alike? So there are three different win situations. So one, the governments of both countries win through increased revenues, taxes, job creation, and attracting value chains around the transport corridors and around the mines that will be able to grow significantly and new mines will be able to open. The total economic impact is roughly 160 billion US dollars over the lifetime of the corridor. Secondly, the miners and freight owners, so the mines in the country, will have a lifeline and will suddenly have an efficient way to market, particularly to export markets to port. Currently, the transport cost makes export of coal in particular very difficult. So having an efficient rail or transport corridor will change the business for mining in Botswana significantly. Lastly, but very importantly, a corridor that will increase freight will be beneficial for Botswana Railways and for Transnet that own the rail infrastructure, so they will have an increased revenue through increased transport, and then also through the freight or through operating the trains, that will also have a positive impact on both of the entities. Both of them are in distress, and increased freight on their rail network will benefit both of those state-owned enterprises. One important aspect to make the South African government really want this corridor is the need for coal. Now, South Africa has a lot of coal. However, particularly the coal in the Mpumalanga region, which is the biggest coal region in South Africa, is facing a coal cliff. So in the next 5 to 15 years, those coal mine fields will deplete, which means that Eskom will not have sufficient coal to fire the coal power plants to produce energy for South Africa and also for its neighbors. So what you see on this slide, black is the declining coal, the white line is the increase in energy demand in South Africa. The gap needs to be filled. It doesn't only need to be filled with coal. Obviously, there's also renewable energies and gas mostly, but there is a big need for South Africa, particularly for Eskom, to get coal from Botswana. And the only way to get big quantities of coal from Botswana is through a rail corridor. The electricity minister of South Africa and the minerals minister in Botswana have met a few weeks ago to address this issue and challenge and the necessity of this corridor. So, what is the right operating model for a corridor like this? How can it be set up best? So this slide is split into what is the right operating model for infrastructure and what is the right operating model for railing. So the infrastructure in both countries is currently owned by the state-owned, owned and operated by the state-owned companies, Botswana Railways and Transnet. For that reason, it is important to have continuity and consistency and not any loss of knowledge. However, considering both companies in both countries are in distress, the private sector will be able to attract funding and also have a operating model in place that will guarantee a return on investment. For that reason, running the infrastructure, the model that looks most viable, looking at the different case studies across the continent, is a version of a public-private partnership. On the train operating side, so we talked about infrastructure, basically who operates, maintains, upgrades the rail lines. We believe it's the best or most viable model is a PPP. Who operates the trains? Both countries, both train operating companies, Botswana Railways and Transnet, come from a monopolistic status quo where both companies operate the trains. I'll come to that in a minute, but South Africa has progressed with legislation to allow private trains to run in parallel to Transnet trains on available slots. This model allows for a pit-to-port operation to not be in the need for changing trains, wagons or locomotives along the route, and will also guarantee an improved efficiency or enable an improved efficiency to rail. So we believe, based on the case studies, that an open access model is the most viable operating model for running the trains. So what are recent developments that are relevant to consider? And we have to look briefly across the border to South Africa, considering that corridor links into South Africa, and there have been significant changes in the rail sector in South Africa recently. The two most important aspects in that is the train operations aspect and then the infrastructure aspect. So end of last year, just before Christmas, South Africa legislated the split of Transnet into above and below the rail, meaning they've split Transnet into a train operating company and into an infrastructure operating company, which then as a consequence allowed private sector players to come and rail on this network. This is gazetted or legislated in the network statement, which was published just before Christmas last year. There's no private rail operators on the network yet, but slots have been identified and private companies can apply to run on those slots in parallel to Transnet. This is relevant for the corridor in Botswana because it will allow not only to rail with Transnet, but also with private players currently on the South African side of that whole corridor. What has also happened in South Africa recently was an RFI, a request for information, to look at potential models on how to upgrade and operate the infrastructure. South African rail infrastructure, similar to Botswanan rail infrastructure, requires significant upgrades to run more efficiently. There's been a lack of investment into maintenance, causing a reduction of rail volumes. So the government said, dear private sector, what do you think should be done when it comes to infrastructure? Who should upgrade it? Who should pay for it? Who should run it? So this basically opens the door for a full or for an infrastructure concession. The lines that the government or Department of Transport in South Africa identified for this process was the iron ore line, the manganese line, the container corridor to Durban, and then the North Corridor, which is the extension of the Mamabula-Lephalale link to Richards Bay. So this is very critical because now if companies start bidding in an RFP process, which is announced to start in August this year and supposed to close in December this year, companies have been advocating to push this deadline because it's a little bit too quick to put up a consortium and bid for a concession. But those are the dates communicated by government right now. This is relevant because if the Mamabula-Lephalale link is built and included, the business case for a concession in South Africa will be much better. So it's critical to have those two projects synchronized. Currently, they're not. So what needs to happen in order to implement this corridor going forward? We believe that there are three main challenges that need to be addressed. This is not a comprehensive list, but this is identifying the most critical steps that still need to be ticked off in order to make this a successful project. Number one, the bilateral agreement between both countries still needs to be signed in order to be able to issue a joint RFP. Secondly, and this is what I just alluded to, the Mamabula-Lephalale link corridor link project has gone through an RFI phase, is supposed to go into an RFP phase. However, if this RFP process or logic is not synchronized with the South African private sector participation RFP, which would allow for concessioning, then both corridors are disjunct and there's a lot of loss in efficiency and potential, and with a risk of delaying both projects. So it's very critical that the South African and the Botswana government agree to link those two RFPs into one Mamabule to Richards Bay corridor and not just a Lephalale to Richards Bay corridor. Lastly, Botswana is facing a legislative framework that currently only allows Botswana Railways to own and operate the infrastructure and trains. In order to increase efficiency and to make this a viable corridor, legislative changes in Botswana would be required to have a synchronized approach here between both countries. That would also allow to attract funding into the corridor and also into the greenfield, but in the corridor upgrades overall. So I hope we come back next year to the Future of Mining Summit 2026 and we'll look onto logistics and say, great that in the last year Mamabula-Lephalale has kicked off, it's signed, the ground has been broken, the potential concessionaire has been identified. I think that would be a massive step forward, and we should be able to look at each other and say, yes, something really has happened, a big shift has happened that is extremely beneficial for the mining industry in Botswana and very helpful for the neighbor in South Africa as well. Thanks a lot.